Hey everyone! Today, we are diving into the pound sterling to US dollar currency pair and exploring the factors that could influence its movement. Now, I know what you might be thinking, another currency forecast? But bear with me, because this one's got some interesting twists and turns. So, let's get started. First things first, the pound sterling to US dollar pair has been showing some positive traction lately, but it's not all smooth sailing. The market is currently trading just above the mid 1.3400s, with a modest gain of less than 0.1% for the day. Now, this might not seem like much, but it's worth noting that the pair has been gaining momentum for 2 straight days. So, what's driving this movement? Well, one key factor is the diplomatic resolution to the 5-month-old war in the Middle East and the reopening of the Strait of Hormuz. This has led to a drop in crude oil prices, easing inflation fears. As a result, traders are now less likely to bet on an imminent Fed rate hike, which is a big deal because it directly impacts the US dollar's status as a safe haven currency. And you know what that means? It's a tailwind for the pound sterling to US dollar pair. But here's the catch: investors are being cautious. They're not making aggressive directional bets just yet. Instead, they're waiting for more information about the US-Iran conflict and the upcoming US non-farm payrolls (NFP) report, which will give us more clues about the Fed's policy path. So, while the market is optimistic, it's not all in on one side. Now, let's talk about the technical side of things. The pound sterling to US dollar pair is above the 200-hour simple moving average (SMA), which is a good sign. Plus, the momentum indicators are mildly supportive, with the relative strength index (RSI) near 55 and the moving average convergence divergence (MACD) positive. This suggests that the bulls are in control as long as the pair stays above the SMA. So, what does this mean for the future? Well, any corrective pullback is likely to attract buyers near the 1.3400 mark, which is a pivotal support level. If the pair breaks below this, it could lead to deeper losses. But if the bulls can hold their ground, they might target the weekly top around the 1.3500 psychological mark. Now, let's shift gears and talk about the pound sterling, GBP, itself. Did you know it's the oldest currency in the world, dating back to 886 AD? It's the official currency of the United Kingdom and the 4th most traded unit for foreign exchange, accounting for 12% of all transactions. The pound sterling to US dollar pair, also known as cable, is a key trading pair, along with pound sterling to Japanese yen, dragon, and euro to pound sterling. The Bank of England, BOE, plays a crucial role in the value of the GBP. They adjust interest rates to achieve their primary goal of price stability, which is a steady inflation rate of around 2%. When inflation is high, the BOE raises interest rates, making the UK more attractive for global investors. Conversely, when inflation is low, the BOE may lower interest rates to stimulate economic growth. Now, here's where it gets interesting. Data releases, such as GDP, manufacturing and services PMIs, and employment, can significantly impact the GBP. A strong economy attracts foreign investment and encourages the BOE to raise interest rates, which strengthens the GBP. But if economic data is weak, the GBP is likely to fall. Another important data release is the trade balance. This measures the difference between a country's exports and imports. A positive net trade balance strengthens a currency, while a negative balance weakens it. So, if a country produces highly sought-after exports, its currency will benefit from the extra demand. In conclusion, the pound sterling to US dollar pair is in a delicate balance, influenced by both economic and geopolitical factors. While the market is optimistic, investors are being cautious, and the technical indicators suggest a constructive tone. The future of the pair depends on the US-Iran conflict and the upcoming NFP report. As for the GBP, its value is closely tied to the BOE's monetary policy and economic data releases, So, that's my take on the pound sterling to US dollar forecast and the factors at play. What do you think? Let me know in the comments below, and don't forget to like and subscribe for more insightful content. Thanks for watching.